Monday, March 7th, 2022, Maneco 64, home of alternative economics and contrarian views. Today, we're going to look at the acceleration of the crack-up boom that I think we're seeing right now, and how it was accelerated actually by this geopolitical crisis or conflict between the West and Russia. Before I do that, I like to say that, yes, we didn't have the Sunday live stream yesterday. Everything's fine. We will be having our next live stream next Sunday. And I think also the Sunday after that, we'll be having a live stream from Switzerland. I'll be in Switzerland that Sunday. So a lot of events going on in the market overnight, and we're going to look into that. But first, I want to look at the crack-up boom and what it is, and I'm going to reference, of course, Human Action by Ludwig von Mises. And if you don't have this book, you can go to the link below in the description that will take you to the Mises.org Institute, and will give you access to a free PDF, or you might choose to buy one. I think it's a really good economic work to have, to reference once in a while. And next week, of course, we have the FOMC meeting. I think March 16th is when they make their decision. And I mean, what's going on in the markets now, especially commodities, the markets are doing the job for the Fed in terms of economic slowdown. But the Fed will probably still raise rates by a quarter percent or 25 basis points. But if you remember well, prior to when things kicked off between Russia and the Ukraine, we were already having a major problem with prices rising. And I say prices instead of inflation because prices are the consequence of inflation. We've had the inflation, of course, since 1971, and especially since 2008, with all the QE, which people said, it will never create inflation. Well, it has finally created inflation, even in Germany in the early 20s or 23, when we had the final crack-up boom, when the currency collapsed. Germany had been inflating since 1914, since the start of the war. So even there, it took about 8 to 9 years for it to germinate. So yes, it would have happened even without this geopolitical crisis. That's what I'm trying to say. The central bankers were cornered, as we know. We had CPI, or prices rising above 7% in the US, 5% most everywhere. And these are with measures that are not really honest, I would say. We had PPI well into the double digits, even in Europe. I think the Norway had something crazy like 70% PPI or something really high. So all this crisis has done, in my opinion, is accelerated the crack-up boom. And I've said many times that it's not a cost push phenomenon, it's a confidence phenomenon. So it's normal actually that the economy will be in a massive depression, just like it was in Germany in the early 20s. So it is normal. You don't need a booming economy for a currency collapse. So I'm going to reference here just part of a section here on the crack-up boom. And if you do go to the Mises website to the link and download a free PDF. Look in the back. That's what I did. Look in the index page under Crack Up Boom, and you'll see where he talks about it. But here I'm on page 428, and this is what he says. But then finally the masses wake up. They become suddenly aware of the fact that inflation is a deliberate policy and will go on endlessly. A breakdown occurs. The crack up boom appears. Everybody is anxious to swap his money against real goods. Well, that's what's happening in the commodity markets right now. And I think the powers that be, of course, are trying to cover their tracks. But be as it may, if people don't realize what von Mises is saying here, it doesn't matter. It's going to happen. It's going to happen. It doesn't matter the reason, just that it's going to happen. That's what I'm trying to warn here. So no matter whether he needs them or not, the real goods, right? No matter how much money he has to pay for them, within a very short time, within a few weeks or even days, the things which were used as money are no longer used as media of exchange. They become scrap paper. Nobody wants to give away anything against them. So there you go. I'm going to stop right here. Am I saying this is going to happen within days? No. When von Mises wrote this, I don't think he would foresee the craziness in central bank monetary policy that we're witnessing now. So I think they could maybe drag this for some more months, maybe even another year or so. But I think we're getting very close. So with that, let's look at where the markets are this morning, what's been driving the markets this morning. Of course, there's a huge story about crude prices. They've jumped, of course, quite high, over 10% at one point, on talk that the U.S. is going to ban Russian oil. So that's what it's all about. Again, that blame game is for us not to really get involved in. Our objective is to dissect what's going on financially and economically and try to protect ourselves. And by now, hopefully a lot of you have done so through having physical gold and silver, through being out of debt. Yes, debts are going to be wiped out substantially, but if you can't service that debt while this is happening, then it's a problem. So yes, we've seen crude oil, for example, Brent crude is moved up to as high as almost $137. Right now, we're like at 126.66. It's still up 7.8%. WTI crude has been as high as 128.24. Right now, it's at 122, still up over 7%. So, yes, Jay Powell will probably raise rates, but it will be, pardon my expression, like pissing into the wind, really, a rate hike. And it won't really matter. It's not going to change anything. It's just like Friday last week when we had the non-farm payroll number. I think it was the first time in decades that that number really didn't matter for the markets, I would say. So having looked at crude, let's go and look at our usual rundown, starting with gold. Yes, gold did get up to just above $2,000 this morning or overnight. Right now we're at $19.90, up about $20. The low has been $19.70, which was the closing on Friday. And the high, of course, just above 2,000. I've got 2,001 in my system. That's the spot price. I don't look at futures. Silver has been as high as 26.16, and I think silver is getting ready. It's getting ready to run. It is frustrating what silver is doing here compared to the other commodities, as we're going to see in a minute. But right now we're at 25.78, up 8 cents. Low has been 25.63. So the stock market, we've got the Dow future down 390, just over 1%. The NASDAQ is down 1.6% or 222 points. The S&P is down 57 points or 1.3%. The FTSE is broken through 7,000. It's down over 1%. And the Euro Stoxx 50. That's an index of major Euro zone stocks. That's down 3% or 109 points. This is really going to hurt Europe. Well, it's going to hurt the whole world, but especially Germany and the whole of the Eurozone. Just have a quick look at some of the banks in Europe. So we've got Commerzbank in Germany down 7%, Deutsche Bank down 6%. In the UK, we got HSBC down just under 2%. NatWest is down 5%. Lloyd's is down 5.5%, and Barclays is down almost 6%. So this is a problem as well here. Rafi spoke about European banks in need of dollars, and they will be. There will be a liquidity crunch, and we'll have to see if the Fed opens that swap line of dollars against euros and pounds for the Europeans. We'll have to see. And that will, of course, go completely counter to tightening. Anyway, let's quickly look at the currencies. So we've got sterling down a third at 131.93. The euro is down 0.5%, 108.74. So I think we've broken key support in the euro dollar. Yeah, the dollar is strong, but gold is even stronger, is stronger than the dollar. So you don't even have to do the maths, right? The dollar is down 1% versus gold. Yes, the dollar is up against these fiat currencies, but it's pretty irrelevant as you can see. The dollar is up slightly versus the yen, 115.00. A dollar is unchanged versus the yuan at 632.12. And Aussie dollar. Aussie dollar is up 0.5% at 74.13. And the dollar is down 0.2 versus the Canadian dollar, 127. Looks like the commodities market helping those two currencies, I would say. And the Kiwi dollar is up 0.5% as well versus the dollar at just below 69. And now to the general commodities. We've gone through crude, of course. So let's have a look at copper. Copper is looking very interesting. We're making an all-time high here. We traded above 5 overnight. And I showed you this chart last week, how the technical picture looked really good. We've broken out of this pennant. We've broken out from the top of the pennant. So all systems are go for copper. I expect a lot higher copper prices. Is it going to happen overnight? No, there will be ups and downs. This is a monthly chart, don't forget. And talking about charts, I just wanted to show you this chart of gold in US dollars. And this is another monthly chart going back, way back to the early 70s. So you can see here how much room we could still have on the upside. Yeah, I'm sure there will be a lot of people saying, oh, gold is overvalued. Maybe in the short term, we could see a slight correction down, but longer term, I think we're just beginning here. And the same thing goes for silver as well, of course. Natural gas, even US nat gas, that's up 0.5%. And European nat gas, that's even crazier. My goodness, we're trading now at almost 280. And this was trading on Friday, quite elevated already. It was trading at 192, and we've recently broken out of the all-time high last year, just above 125. So natural gas for Europe is going crazy really here this morning, so not good at all. So we'll finish off and we'll quickly look at the bond market. They seem to be fairly quiet actually. The 10-year yield is unchanged at 172, and the 2-year note actually is down 2 basis points at 147. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.